stock leveraged ETFs like NVDL can be the ultimate meat grinder in the market. Most traders are losing because they're trading noise instead of signals, and because they believe these 5 expensive lies. Pay special attention to lie number 4 because I personally think it's the epitome of stupid. Let's dive in. Hey, lie number 1 is when people say it's just a stock on steroids. That's totally wrong because part of the deal is the ETFs on any entity have distorted technicals. And you're going, what's the heck's a distorted technical, Dennis? Part of the deal is if your rules, like in the case here of NVDA, is on the left-hand side, NVDL is on the right side. Let's say your rules are, I'm going to take a close above the 20-day moving average to trigger my trade. As you can see, if you were trading NVDA, regular stock, you had a close above the 20-day moving average right there. But what was happening over here on the leveraged ETF? I'm glad you asked. This is what happened. Price action never closed above the 20-day moving average, and therefore you wouldn't have been able to get on that trade. And what would you have missed? You would have missed a 27% run from there all the way up to there. Now you may say, well, what's the reason for that? Well, part of the deal is with the leveraged ETFs, they are susceptible to what's called volatility drag, which basically reduces the value because of how they have to buy the entities that to provide that 2 times leverage. Now, I'm not going to get into the nuts and bolts of that, but just be aware that it's not just a stock on steroid. You have to adjust some of your rules and oftentimes trade off of what you see on the non-leveraged ETF, because with the non-leveraged ETF is where you get the pure technicals. So if you're a technical trader, hone in over there. Okay, here's the takeaway on this, is if you are trading the leveraged ETFs, then the idea thing to do is trade the technicals off of the non-leveraged ETF, or the underlying, if you will, for more pure entry signals and also exit signals. Okay, the next lie is the underlying is strong, so I'm safe. As you can see here on the daily chart of NVDA, yeah, we had one heck of a big move as you see this moving up to the upside. And so we know that, hey, NVDA is a great stock. Then we get into this area over here. Are you ready for that ride on the side? Remember, we have the volatility drag that can impact the value and drain value out of the leveraged ETF. But are you ready for the full downside? Okay, let's check out, if you're a buy and holder, how much pain you would have been in. So let's say you were patient and you actually got into NVDL right there, just as we're coming off of the moving average, and you bought it there, and all of a sudden, oh, you're just patting yourself in the back because now you're up 42%, now you're up 52%, now you're up 57%. And then the market starts to turn over. On NVDL, you would have been up, oh, let's say about 28%. Very handsome. Then we start to roll over. If I'm basically utilizing the same rules, saying, hey, I'm a buy and holder guy because I'm going to buy NVDA because I know it's a strong stock. And here's a secret. The worst case is you would have bought one of these breakouts here, and then the market rolls over on you. Now, there were clues, and if you want to see the clues about market turning over, I've got a great video on both market tops and market bottoms. You might want to check that out. I'll put the link up there. So prices start to turn over. And let's say you did buy here, expecting it to just run on up. However, NVDA dropped about 42% down to the low before it started to reverse up. But what about if I would have done the same thing and bought NVDL? NVDL at its low dropped down to 71%. Would you be willing to go through the pain of your $100 turning into just $25 in just a few short weeks? That's a question you're going to have to answer. So remember, if you ever catch yourself saying, hey, it'll come back, or I'm now a buy and hold investor and you're really a swing trader, then that's ego talking. Yeah, you could be right about the story and completely wrong about the trade because, as we see in current price action, NVDA is coming up along with NVDL. We don't trade narratives. Remember that. We trade the price action, and price doesn't care what you think. And this is exactly where so many traders get trapped, especially when we get to lie number 4. If you're a busy professional trying to trade leveraged ETFs, the real problem isn't the market, it's complexity. Most traders overcomplicate everything and then freeze when it matters. If you want a simple, structured way to approach this, I put it into something I call the Busyman's Guide, a little ebook. It walks you through a clean, simplified process so you can stop guessing and start following a system. The link's in the description. What about the next one? Oh, I love this one. I'll just average down. So if we go back to the same chart here from back in, and this is back in the 1st of January 2025, and let's say they bought. Most people, averaging down is a fool's errand. Look it up if you don't know what that means. And so what that means is every time it dips, you buy. Every time it dips, you buy. Every time it dips, you buy. And so with the leverage ETF, let's go a little bit deeper on this. Make sure I picked that up at the right place. So we already know that NVDA already dropped down here. Dropped about 42%. This dropped about over 70%. So if you think about that from the aspect of averaging down, you would just buy it every time it basically fell. In other words, when it fell here, you'd buy it. When it fell here, you'd buy it. Now, you would think that would make a lot of sense, but there are cases where it never comes back. And then you feel like that person who's just a big fool. And so remember, if the market is turned over, that is not the time to buy. Now, we follow that very directly, but simple rules. If everything's below the moving averages, the 8, the 20, the 50, and the 200, don't touch it. Don't try a long trade because the probabilities of getting burnt are quite high. The next lie is, I can time the market. And so they spend all their time staring at that 5-minute chart and totally ignoring the structure that's happening over on the daily chart, which is where most swing traders should live anyway. So they're sitting there staring at that 5-minute chart, and it's just noise. There's no signal in that. So one of the things for timing bottoms can be a real struggle is typically wait for the longer term momentum like the weekly MACD and or the TSI like I like to trade. Wait for that to turn over or turn back up to the upside, and that tells you the tide is coming in, I'm now safe, and the bottom is in place. So don't try to trade the exact bottom. Jump on it after the bottom is formed. Before we get to the next lie, if this is already making more sense than what you're currently doing, go ahead and hit subscribe. Every week, I break down some swing trades on leverage ETFs, utilizing a system instead of just guessing. Okay, here's the one lie that turns a swing trader into a buy and hold investor. It's not a real loss if I don't sell it. While you're holding and hoping, your capital is stuck. You know, your stress goes high. You've just watched it drop 75%. If you had to use that money right now, would that loss be real? Yes. Even if you haven't taken your loss, the loss is still real. Could it turn around and come back? Of course it could. But one of the things, because of the volatility decay with the leverage ETFs, it may not come back as high as you hoped it would. We at AutoPilot Trading, we like to trade reality. If the chart says we're wrong, we're out. If you're ready to stop believing the lies, you're ready for transformation. Hey, here's the shift. You stop believing the lies and you start following the rules. Weekly TSI, MACD for your green light to trade to the long side, bracket orders to exit, no guessing, no managing every tick, no emotional decisions. Just a repeatable system. This is how disciplined traders operate. not because they're smarter, but because they follow the process. Trading leverage ETFs like NVDL, it can build wealth if you respect the system, or it can destroy your account if you believe the lies. If you want to see exactly how this plays out step by step on something like TQQQ, watch this masterclass next.